Okay, great. Thank you so much for joining in this live session on winning 10x formula, the 3 days live micro school. So we're already on day two. Yesterday we covered on day one. We covered quickly just to get started. We covered the roadmap. We covered the blueprint. We covered the day one challenge, in which we spoke about various tools which helps us do planning to 10x our investments. So we spoke about the risk profiling tool. We spoke about the human life value tool. We spoke about goal-based planning tool, and we also spoke about the investment audit. The good part is that in case you've missed out on the day one challenge, we've done the recording and we've helped you with the link already in the description in the YouTube channel as well as on the Facebook live description box. You can view the day one and then attend this. And probably if you're watching us live, and I'm assuming that you've already attended a day one challenge and then you're on to day two, we generally advise that go step by step, stage by stage. So if you've attended the day one challenge, welcome to the day two challenge. The day two is all about execution. So when we talk about day two, which is the execution, we're going to talk about various financial products. I'll give you the live demo in terms of how it works and who it works for. So just firstly, quickly covering up on the execution bit of it, there are mainly the risk protection, which we talk about. We talk about the choosing the right financial product basis on your financial goals and your risk profiling, which we've already spoken in day one. So given that you know your risk profile, which is conservative, moderate, or aggressive, given that you know your financial goals with a short term, mid term, and long term in nature, which you would have, I'm assuming that you would have attended the day one challenge, or you would have made the financial goals already using the financial planning goal sheet. The calculators are already given to you. In case you do not have access, you can request our team members or put it in the chat box or in the comment section, and we'll provide you with the requisite financial tools. And then how do we automate the investment process? So we're going to talk about all this in today's live session. So getting started with the 5 financial products, which will help us in the journey of 10x in the year 2022. So these are the 5 must financial products which you should have in your portfolio. I'm going to walk you through in a very fast manner, and then I'll show you the live demo as well. How do you choose these financial products? So first is the ETF on our list, that is the exchange traded funds. We find this is the most cost effective way to invest. Second is the model funds route, which is the smart way to invest. I'm going to walk you one by one on this on a live basis. The third is the mutual fund. That's the diversified way to invest. The fourth is the direct stock route. That's the concentrated way to invest. And the fifth is NPS, National Pension Scheme, Sovereign Gold Bond, ULIPs. That's the tax efficient way to invest. As a bonus, you can also know more about the derivative strategies, which we'll be talking about. So these were primarily the 5 financial products which we talk about in the year 2022, which can help us 10x your investments. So getting started one by one. First on the ETF list. So what you can do is, I'll share my screen again. What you need to do is you need to go on to, if you want to know what are the ETFs and what are ETFs and how do we invest in ETFs. So I'm sharing my screen. You can simply, you can get the list from us as well, but I'm just showing you direct ways as to how you can actually find the ETF. So this is the NSE India side. So this gives you all the details what is required for ETFs. So ETFs, simply it means exchange traded funds. They are listed stocks or listed funds on the National Stock Exchange, Bombay Stock Exchange. So the way you buy stocks in the open market between 9:15 to 3:30, you can also buy ETFs real time between 9:15 to 3:30. Index funds are similar to ETFs. So if you want to buy through the mutual fund route, you can buy index funds. If you want to buy through the stock route, open market in the NSE, BSE, you can go through the exchange traded funds. Now, just to give you a sense as to what are the types of ETFs, so what you just need to do is simply you can type in the NSE ETF list. So you'll get all the ETFs here. So typically the famous ones are the Nifty 50, Junior Bs. So Nifty 50, these are the companies: Edelweiss, ICICI, Kotak, Motilal Oswal, Quantum, Relier, SBI, UTI, offering the same thing. It's one and the same thing. You can buy any of the Nifty 50, Nifty 100 if you want to buy the first 100 stocks of India in one ETF. So you can buy through this ETF. If you want to buy, say, junior Vs, the next 50, 51 to 100, that's called junior Vs. If you want to buy stocks belonging to the PSU sector, bank sector, you can buy the PSU bank Bs. If you want to buy the junior Bs, which I told you, between 51 to 100 stocks of India, you can buy the junior Bs. Similarly, infra Bs. If you want to buy dividend, which give you good dividend opportunities, you can buy the Reliance dividend opportunities ETFs. So typically, when it comes to ETF investing, we've seen the returns hovering between 15 to 20% in a time frame of 5 to 10 years. So given that if you want a static portfolio without any active intervention, then ETF is one of the bestest way to invest in the year 2022 to 10x your investments. Coming to the next, which is model funds, I'll show you through an example through a login, basically, as to how you can actually invest in the model funds route. So just give me a minute, I'll log into my page. So since we are registered franchisees with Motilal Oswal and NJ India Invest, I'll show you a Motilal Oswal login, and I'll try and show you what are model funds there. So this is a login of a Motilal Oswal account. So there's something called as Intelligent Advisory Portfolio. You click here, and then this is a live platform, by the way. So model funds, how they work is they are pre-packaged equity products. So a basket of stocks which are managed by somebody called as registered investment advisor. They manage the portfolio on your behalf. You simply need to stay invested for a period of number of years based on a risk profile. So how it works is you need to choose depending on your risk profile, which we taught you in, which we told you in day one challenge. We gave you a risk profiler where you can simply put in the answer the questions basis on your choice, and then the result comes in front of you in terms of points, in value of point value terms, and then you can choose, then you can decide or the calculator tells you whether you're an aggressive investor, moderate investor, or a conservative investor. So basis on your risk profile, risk appetite, whether it is aggressive, moderate, conservative, you can actually choose. So supposedly if you are a conservative investor, the minimum investment is 2.5 lakh rupees, which is required. You can invest through a lump sum or through the SIP route. Supposedly you want to invest through the lump sum route. So you click on here. Now you have the subscription model or fixed fee model. So subscription model charges you 2% on a year-on-year basis. Since it's a SEBI registered product, so the capping of the you can say expense ratio is up to 2.5% in the subscription model, and the standard broker charges of 0.5% is applied. So supposedly if you want to invest in this portfolio, what you just need to do is you'll need to click on proceed. Then again, a risk profiling questions are asked. You fill up these risk profiling questions as per your choice, and then you click on proceed. Now supposedly you click on proceed here. As per my risk profile or as per the questions which I answered, it came out to be conservative. I say okay fine, I accept my risk profile, and I click ahead. Simply add the money, which how much I need to you can say check this. I need to read these terms and conditions, which are generally talking about the fund management expenses, what are the objectives of the fund, how does it deal in terms of the buying and selling of securities, and the experiences of the fund manager, so on and so forth. It also gives you a snapshot of the risk profile which you filled in, and then you click on I agree, and then simply what you just need to do is you need to put in money, which is minimum 2.5 lakh is 2.5 lakh rupees. Upper limit, there is no upper limit. And then you invest, and on a real time, this is a real time product because underlying are stocks. So stocks units are bought in, stocks are bought on behalf of you. So during market hours between 9:15 to 3:30, you need to enter into this product, and then real time execution of this model funds happens on behalf of you. So that was model funds. Going to the next portfolio, which is say mutual funds. Now in mutual funds also, what we do is I'll again show you through a live example. I'm trying to give you live demos so that you know what is going on. So how it will work, simply like supposedly if you want to invest in mutual funds, so I'm sharing my screen again. So we have a platform given by NJ. So you simply need to click on getting started. Now, supposedly you are an investor, and I'll take an example. Now, say if I choose I want to start planning, and my objective of investing in mutual funds is to build wealth. Maybe somebody's objective is to create regular income, or maybe somebody's objective is to save tax. So supposedly I say I want to build wealth. I choose that option. Then there are two ways of investing. One is through the monthly route, and one is through the one-time route. So supposedly I say I want to invest through the monthly route. I enter the amount, say 25,000 rupees I want to invest. I click on next. Now it tells me how many years I want to stay invested. So supposedly I want to stay invested for 20 years from now, or say maybe 15 years. So I click on 50, I choose the bar to 15 years, and I click on next. Then it just starts processing the request, and it finds the best mutual funds suited as per the risk profile, as per the time horizon, so on and so forth. Now, since you already know your risk appetite in the previous you can say session, we taught you and we gave you a tool as to how you can choose your risk profile. Now, supposedly you are an aggressive investor, aggressive risk profile. So you need to click on this. Then automatically, this will give you a history of the last 1 year, last 5 years, last 15 years on a rolling period. What has been the best return in a 1 year period? What has been the worst return in a 1 year period? So best return has been 243%. The worst return has been 51%. In 5 years, the best return has been 57%. The worst return has been -2%. The median return has been, in a 15-year period, the best return has been 19%, the median return has been 13%, and the worst return is 9.28% for an aggressive investor. For a moderate aggressive person, the results are already in front of your screen. So supposedly now with this, you get a idea as to what is the risk you are taking on your money when you're investing for a period of 15 years. So obviously it becomes a no-brainer that with time, as the time passes, we always say that risk is a function of time, which means that with the passing number of years, the risk almost minimizes or becomes zero. So in 15 years of time, you're actually taking no risk at all. And the minimum return on investments which you're getting is 9.28%. The maximum return is 19.76% for an aggressive investor. So once you are done with this, what you simply just need to do is you need to click on finalize plan with selected option, and click on finalize plan. And given that you already have an account with us, you can directly get invested into this. Your portfolio gets created, customized personalized portfolio gets created, and you can simply invest in nothing but the best of mutual funds. So that was on the mutual fund side of things. Now coming to the fourth part of it, which is direct stocks. So how does direct stock work? Now, just to give you a sense, you can work in blue chip companies specifically. So just to give you an idea, these are few of the stocks. This is just a disclaimer at the start of the presentation. Also, we showed the disclaimer, and just now also I'm speaking it out. These are all exemplary. These are not advisory products which I'm telling you. This is just for example. You need to consult your financial advisor before actually investing into any of the equity-based products, because all these products are subject to market risk. So you need to do your due diligence. You need to do your proper study analysis, and then and only then invest into such products. So just to give you some sense of the blue chip stocks, so in IT, Infosys, banks, ICICI Bank, HDFC Bank, in refineries, Reliance Industries, in PSU Bank, State Bank of India, again IT, TCS, L&T in the infrastructure domain, finance, NBFC space, Bajaj Finance, again in the banking space, Axis Bank, in the finance domain, HDFC, automobile, Tata Mobile, Tata Motors, in the telecom sector, Bharti Airtel, in FMCG, Hindustan Unilever, automobile again, Maruti Suzuki, pharmaceutical, Sun Pharma, cement industry, Ultratech Cement, bank again, Kotak Mahindra Bank, IT, Emphasis, retail sector, Avenue Supermarket, which is fondly known as D-Mart, cement, Ambuja Cement, especially after the merger of ACC, Ambuja Cements by the Adani Group. So it is in momentum. In the ready-made garments apparel space, Page Industries, pharmaceuticals, DV's Lab, automobiles, Bajaj Auto, in the capital good electrical equipment sector, Crompton Greaves Consumers, healthcare, Max Healthcare, in automobile, M&M, so on and so forth. So this is a list of all the blue chip stocks which are good to invest in. But now the problem comes, how many stocks to invest in and how many stocks to actually take care of. Now, just to, if you were not overwhelmed by this situation, let me show you another list of stocks which we have, which you can actually invest in, or just to give you a sense of the stocks which we have now. Uh, just sharing the list of stocks with you again. Now, just can you, if you can see the screen. Now, these are the list of Indian stocks. So now just imagine the number of stocks we have. Now, it is humanly not possible to track so many stocks. We have the list though, but in our own personal capacity also, it is humanly not possible to track so many stocks. So ultimately, when it comes to stock investing, you need a proper scale, you need proper guidance, you need proper advisory to actually invest in these stocks. So these are almost close to 4,000 stocks list which we have. Just browsing quickly through it. These are the stocks. Now, just to give you a sense, which industry it belongs to, what is the current market price, what is the market cap, what is the all-time high, what is the debt to equity ratio, what is the price to earning, what is the operation cash flow, what was the sale, what is the price to book value, what is return on capital employed, return on assets, ROA, ROE, EPS, promoter holdings, pledged percentage. So recently, like the Adani Group, they pledged Ambuja ACC Cement, and that is why today it tanked down by almost 4 to 5%. So pledging of stocks is generally considered a bad thing in the market. We feel that the promoter is taking advantage of these stocks holdings they have. PEG ratio, price to free cash flow, sales growth for 5 years, 7 years, 3 years, average return on equities, dividend yield, industry PE, so on and so forth. So these are so many parameters to operating profit margins. So these are so many parameters to actually track when it comes to equity investings. And if you do it right, you can actually find those multi-bagger stocks which you have heard. And if you do it wrong, you can actually suffer a loss. So just a small tool which we want to, just a small hint, or you can say a website which we'll like to show you, which you can track, and it is free of cost, is called screener.in. So many of you would have used this. So just to give you a sense, say we are tracking, say one of the stocks called ITC. So you need to put in ITC here. So here you can see what is the market cap. It is 4 lakh crores. The current market price is 341. It's going almost at an all-time high. The dividend yield is 3.37. The book value is 50.7, which means if it was to close its shop, if it was to close its entire business, what is the per share value which an investor will get? That is book value. Stock P, what is the price investor is ready, or a shareholder is going to give or ready to give to earn 1 rupee from the share. So 25 rupees per 1 rupee is the price which the person or the investor is ready to give when it comes to ITC. Though obviously it is the higher, it means the pricier the stock is, but it does not directly correlate to its performance. ROC, ROE, return on capital employed, return on equity. So this is 33.6, 24.8%. So on and so forth. You can read about the company here. You can read about the price movement in the last 1 year, 6 years, last 3 years, last 5 years. You can know about the P ratio, whether it is increasing or decreasing. Then sales and margin. If you want to know what is the sales and margin, the gross profit margin, the operating profit margin, the net profit margin, the quarter sales. So if you want to just look at the gross profit margin, you can remove these curves. So the gross profit margin has been decreasing in the last 5 years, but in the 6 months, it has again been decreasing. In the last 1 year, it has been up and down. If you want to see the P ratio in the last, say, 1 year, so the P is increasing. Now, if you want to see price to book value, is it increasing or decreasing in the last 1 year? So it has been increasing. The price has been increasing as compared to its book value. So the inference is something which you need to make at your own end, but this is how you can read the charts, the market cap to sales, so on and so forth. So you can read these charts at your own will. These are the pros and cons of a company. You can see the peer comparison. So it's mainly a Indian tobacco company, so mainly known for manufacturing cigarettes. So what are the other players in the market which are listed? So you can get the view from here. Then you can look at the quarterly results. that is the profit before tax. Is it increasing on a quarter to quarter basis? Is the net profit increasing or decreasing? These are the consolidated figures on a year to year basis from a balance sheet point of view. So profit before tax, is it increase or decrease? What is the compounded profit growth? What is the sales growth which is happening from the last 3 years? This is for the current year. What has been the return on equity in the last 3, 5, 10 years? So it has been a consistent performer as far as return on equity is concerned, so on and so forth. So on the balance sheet, what are the reserves, borrowings, liabilities, you can check on this. Cash flow from operating activity, from investing activities, from financing activities. Is it positive cash flow or is it negative cash flow? So it is very, very important to have a positive cash flow as far as operating activities are concerned. Investing and financing activities can still be negative because they would have invested somewhere or they would have taken a loan. So that can still be understandable if it is a negative cash flow, but operating cash flow should always be positive. Then you need to see the shareholder pattern. How much is the public shareholding? What is the domestic institutional investors like mutual funds, public provident funds? How much are they investing into this stock? And what are the foreign investors doing about it? Are they increasing the stake? Are they reducing the stakes? So these are all early hints which you can get while choosing a stock. So that was on the stocks. I'll also quickly show you as to what differently what we do and what we have to offer when it comes to stock investing. On a quick note, just give me a quick minute. I'll log in to the. So just give me a minute. So we also have something called as a we have a software which gives us these technical parameters as to whether the stock can go up, down in a period of 4 months, 6 months, 2 months, 1 week, 2 weeks. So we have these various tools which you get access to when you actually get started with us. So I'll try and give you a perspective of that as well. So I'll just quickly just show you a snapshot. Because of the limitation of time, I'll not be able to give you a drill down of it, but I can just give you a snapshot. Since the market is closed just now, so you may not get the entire essence of it, but just give you a sense. So we have something called as these trade guide signals. So we have something called as these TGS signal tracker, where so just giving you a hint. So just now the market is closed, so the real-time values will not prop up, but there are almost 300 to 400 stocks which we track online at a real-time level. So supposedly, so there's opening while it opens up. Now, supposedly you want to you want to take positional trades. Positional trades means which are valid for 1 to 2 months, 2 to 3 months, where you're having a horizon of 1 to 3 months. It gives you a sense as to what, especially if you're an investor, this tool will also help you, because if you want to put your hard-earned money for the next 1 year, 2 years, 3 years, so you get a sense as to how the market is performing in the next 1 to 3 months. So being a you can say good analyst in terms of understanding the traded signals which are giving in the next 1 to 2 months, that also decides the momentum for the next 3 to 6 months. So these positional calls say supposedly they give you as to what are the profit margins till now. They also tell you what is the entry point, entry time, what are the exit points, what is the maximum stop loss you should work with, what is the maximum profit which you can generate, what are the target prices, whether it is a buy or whether it is a sell. So LT is a sell, ITC is a buy, Team Lee is a buy, so on and so forth. EI Hotels, KEC, Dabur is a buy. They also give, like, if you were to log in into the terminal at the real time, then it will also give you the target price in the next 1 to 2 months, what is expected. So this will help you, even if you are an investor, it helps you in terms of taking the right entry step, and it also helps you in taking the position sizing. Supposedly you have 1 lakh rupees in your account and you want to invest in a particular stock, say Reliance, say ITC. And when you have such kind of tools and such kind of mechanisms to track what are the performances and what are the ongoing, you can say, performance is going to be in terms of the technical analysis, in terms of the volumes, charts, what are showing up. So these will help you to take decisions, and it will help you to take the right position sizing. So that was on the equity part of it. A quick note on NPS. I'm trying to give you things which you can actually find at your own level. So just to talk on the national pension scheme, you can also enroll through us in the national pension scheme, but I'll just try and give you some sense on the national pension scheme. So this is the website. We are registered partners with NPS, so you can get the NPS done via us as well. But just to give you a what is national pension scheme, so you can go directly on the website and just to read as to what is a national pension scheme. So it I'll just show you I'll just show you another page. So you can just simply type here what is national pension scheme. So it's basically a retirement scheme in which you need to invest up to the year of 60, minimum up to the age of 60. You can also stay invested up to 65, 70, 75 years of age and then start your pension. But generally how it works is that you keep contributing on a monthly or a yearly basis. Up to 50,000 rupees, you get tax rebate over and above 1.5 lakh rupees. In case if you want to invest the base 1.5 lakh rupees also, which against which you get a tax is exempt under 80C, you can do so. So total contribution 1.5 to plus 50,000, total 2 lakh rupees you can invest. There are two tiers, tier 1 and tier 2. I'm not going into the detail because I have already made a detailed video of it on our YouTube channel by the name of Tag Investments. You can search things there. So that is national pension scheme. It helps you save tax under Section 80C over and above the 1.5 lakh limit. The next is sovereign gold bonds, which we want to talk about. So again, simply you can go on to the internet, search on sovereign gold bond. This is again this is issued by the Reserve Bank of India on behalf of Government of India. So that is why it's called sovereign. It guarantees you sovereign safety. So how it works is you need to it's a monthly subscription. Every time a new tranche is opened on a monthly basis, you can invest in the fresh tranche. It has a lock-in of 8 years, and the scheme gives you a yearly return of 2.5%, which is interest over and above the gold returns. So whatever gold returns you get in the next 8 years, that is yours. Plus, on a yearly basis, 2.5% interest is given to you as an investor, and the returns which you get after 8 years on gold, that is tax-free in your hand. So again, a good product to invest in to hedge your entire investment portfolio, and otherwise as a good investment tool also you can put 5% to 10% in the gold bonds as well. The last not the least being ULIPs. So ULIPs, why we recommend ULIPs? Because it is one, it is market based, and second, it has insurance component in it, and up to 2.5 lakh rupees on a yearly basis if you pay the premium. And once the maturity comes, which is after 5 years, 10 years, 15 years, that comes tax free in your hands. So tax is a big monster along with inflation. So what we feel is you need to choose your products rightly and you need to stay invested rightly. So those were the 5 products. Other than that, as I told you, on a bonus basis, there is something called as derivative markets, fondly called as options, futures, put and call. You would have heard all these terms. So again, we made detailed videos on a YouTube channel by the name of Tag Investments on the same. So you can watch these things there. But what we advocate and recommend is, given that you have a sizable portfolio of 25, 30, 50 lakhs, 1 crore, then you should definitely think and enter and study, first learn about option and futures. And then it is a good portfolio you can say financial product to hedge your portfolio. You can use it as a hedging tool as far as future and options are concerned. Sometimes use it as a speculative tool. But what we recommend options and futures is for the hedging purpose, especially if you have a sizable portfolio, as I told you, 25 to 50 lakhs or 1 crore and more, you can definitely start using futures and options as a hedging tool. So to know more about all these things, you can obviously get in touch with our team members. We'll be happy to assist you. So these were the 5 financial products which we thought to bring, you can say, bring awareness into your financial lives. You can include these 5 financial products which we just spoke about. We also conduct regular webinars on a monthly basis. Once you enroll with us, you get a 12-month webinar access from us, where we teach you about, or we talk about, or we spread financial awareness about various financial products and economic condition, and how you can take advantage of those products in the given market scenario. We talk about all those things. We also run a program by the name of 10x your investments, basis on which this 3-day challenge program is this 3-day challenge is made. So what I'll be doing is I'll be sharing a link with you in case if any one of you is interested to enroll in the 10x your investments program with us, you can get started with that. So I'll just share that link with you. You can enroll in that program with us. If you're watching us on Facebook or YouTube, in the description box or in the you can say chat box or in the comment box, we generally leave a link as to how you can enroll. So all those who are watching us live, I'm sharing the link with you. So this is the link which I've just put it in the chat box. And also, if you are watching us on Facebook or YouTube, in the description section, you will be finding a link to enroll in the 10x challenge and the 10x program. So you can click on this link. The coupon code is 90. If you put in 90, I'll show you how it works. So typically how it will work is, once you click on this link, so here, once you click on this link, this page opens and you need to put in a coupon code of 90 and click on apply and pay now. So you just need to pay $9.99 to get started with us. You get access to financial tools. You get access to our execution support. You get access to all these ready-made portfolios, which I just showed you, just at the cost of $9.99. You need to activate a Motilal Oswal trading account, demat account with us. You need to activate an NJ India Invest demat account with us, so that we can help you execute, as I showed you in this entire session, that there are some tools, there are some proprietary tools which work only and only on these platforms, and we have access to these platforms. Will this model funds, mutual funds, ETFs, those rebalancing and so on and so forth work for you? So that was it for the day 2. Thank you so much for watching us live and otherwise as well. In case you've not watched on day 1, do watch us. We've given you the link in the I'll share the link also for that matter, in case if you don't have that link in the chat box, as any which was in the description box. We've left that link to you. I'll share it here as well. Just give me a quick minute. So this is the link in the chat box. I've given it. This is the link for yesterday's session. So in case you missed out listening to us yesterday, you can watch the video here. So thank you once again for watching us on day 2. The last day is tomorrow, which is day 3 of the 3-day challenge. So this is all about execution. I understand that things can be understood, can be less understood, and that is why we also give you a incentive, or we also give you a strategy call which you can book with us. The links which are there for the strategy call, I can again share that with you. So in case if you want to get started with us or book a call with us, you can also book a Calendly call with us, which is a 30 minutes call. So I've given you the link here. You can also find it in the description box of the YouTube and Facebook, and you can chat with us on a one-to-one basis, where we actually understand your queries, understand your interests and requirements on a one-to-one basis, and then assist you, help you in the 10x challenge. So thank you so much once again. It was lovely talking to all of you.